Hello, this is the Chart Profit video, approaching 2 hours into the trading day, Friday 22nd of June. This from the pre-open today. Got a minor controlling price on the E-mini S&P right here at 27.72. If anything, the E-mini has been oscillating around that level this week, but we're using that as a reference and watching price relative to that minor controlling price until and unless it migrates somewhere. I said pre-open on Monday that I assume the buyers are still in control of the day frame, but if I mark significant selling below this level, below 27.72, I would assume that 27.18, which is the next major controlling price down at that level, I would assume that that would be tested. So looking at the current 30-minute chart, there's the level at this point here, and here's the opening, the blue bars here since the session opened. So if that controlling price doesn't migrate lower, we need to see the E-mini back above this level. So here's the current pulse chart. The last significant selling I marked was back over here 41 days ago. That's the red bar. The chart looks pretty healthy with green here for the breadth. We're above zero on the price momentum chart. The only negative at the moment is this divergence between price, which has seen a higher high at this point, and the momentum indicator at the bottom, which has seen a lower high. That's a negative divergence, and we tick down at this point here. Maybe quite healthy for the longer term trend, which stays intact above 27.18, as I just mentioned on the E-mini. Can be quite healthy to see just how effective the sellers, the red bars, can be in an uptrend, like this bar here and this one here and this one here. You see the sellers appearing on the day frame. The buyers take confidence in the fact that their activity is ineffective, so when the high of those days gets exceeded, usually see higher prices. So here's the hourly chart on the E-mini. S&P 27.18 is the most important level in the longer term for me, and what happens above that doesn't necessarily damage the long-term trend. Here's the equivalent level on the spider, 271.70, which is the 18-month IWM Russell 2000 ETF, relatively outperforming large caps. You can see the high at the start of the year has been exceeded, and we've broken higher. A situation like this usually find that the closest important reference level is somewhat distant from the current price, so other charts would be more useful in that regard. Small caps outperforming though at the moment. Useful level on the FTSE 100 chart. The UK large cap index is at 77.11. That's the 3-month. We spent the entire week below that level, which is weaker price location. Price back above that point would suggest higher. I'm calling that resistance at the moment. If we look at the sentiment indicators, you can see in the public poll here, bulls percent was lower at 38.7. We're getting a little overheated. Previous week 44.8%. That was a 17-week high. As we know, on most of these sentiment indicators, what is now 10 weeks ago at this point, we saw a lot of the sentiment indicators really overly bearish at that point. For instance, here the bulls percent fell to 26.1%. 10 weeks ago, that was the lowest since the week ending 1st of September. And again, bears percent reached 42.8% 10 weeks ago. That was the highest since March. So this was the last significant time where sentiment reached anything like an extreme. Currently pretty neutral. Same thing in the Investors Intelligence poll. 10 weeks ago, bulls percent there fell to 42.2%. That was the lowest since 2016. This week, bulls percent fell a little, bears percent almost unchanged. And again, in the US fund flows data 10 weeks ago, the 4-week flow number fell to a negative $29.9 billion. That was the lowest since a negative $33 billion in December, and that was the lowest since 2008. So again, fairly extreme negative sentiment 10 weeks ago. We had a net outflow this week. Equity funds, including ETF, of negative 1.3 billion just this week. Not a significant number. This is TLT, the T-bond ETF, As discussed last week, two major levels on this chart. The major controlling price is at 121 up here. That's currently resistance. We're printing just below that level. On the minor time frame, the 6 month is at 118.50, and that was recently support, and I've said that high or low above that resistance or a lower high below that support would likely indicate the next directional move on this chart. In the pre-open, I've been saying that as long as USO, the oil ETF, holds this level at 12.79, which is a 12-month controlling price, it's in a longer-term strong price location. We've popped up today, but unless this controlling price migrates, and it could, as I said, price above that is still in a strong position. Dollar index attempted a break above the 6-year. It's here at 94.80. It's just been attracted back to that point at the end of this week, looking for a convincing high or low above that level. This kind of price action not helping much. Looks like this as a weekly bar. But as we know, GLD is broken below 121. It's major. The gold ETF is now in a weaker price location below that point. This is cash gold with its major here, 1286.50. That's weaker. Euro FX chart remains in a weak position below its 1 year at 117.55, which could well be resistance if it's tested. And the final chart, the British pound, which has found a little support at 131.70, which is its major. And we're just bouncing a little at the end of this week. My feeling on this chart is this is an important level. If we see time, convincing time printed below that point, you'd see a continuation of this trend. This support, however, is a good level for a turn. Okay, we conclude. Thanks for watching.